Welcome, friends, to Entry Models. That one topic everybody's waiting for. And to be honest, it is the most overrated topic in the full trading community. In the SMC community, structure is the most overrated one, but of course, entry models as well. But entry models for every single retail trader, it is the most important thing that they look for. No matter how everything looks like, if they get their entry models, no matter where price is, they are going to smash that sell or buy bottom, full margin trade, and let's go. And this is what I want to explain you right now here in this video. Entry models is for me one of the most less important topics. Very, very simple. Just to say it up front. I just use entry models because you need to use an entry model. Okay, and we will show you how we can do that because some of the entry models are no real entry models. Okay, and important is to understand that we do not trade based off entry models. Okay, so entry models, just to sum it up, what it is in reality, is just a little bit of extra confirmation. So when price, is moving like this, and we do expect, because here we got a supply zone, we do expect that price will go down from there. So what the majority is doing is they do wait here for their M1 break of structure for the nice and clean retest before price will drop all the way back down. So this is what they want to see, because if they do not see these things, then hey, it is not valid, right? So if the price will move like this, break of structure to the downside, break of structure to the upside, and then you want to see price giving you here the retest at the new created supply zone because we broke structure there. That's what everybody wants to see. And if you do not get this kind of thing, the full setup is invalid, right? Now, I don't know how often you've experienced this, but personally for me, what I do see very often on the charts, and I'm going to explain you exactly why this is the case. What I see on the charts is not something like this, but I see very often something like this. You get your break of structure, but price will not really come and retest your supply zone that you've been waiting for. Price in fact will come then very crazy down, will then hit something here, and then it will just continue to drop down if this is what price wants to do. So very important to understand these things. Waiting for your M1 boss and then for price to return to your supply zone is one of the scenarios which we all wish that it will come true. And at the end, it is more than likely a wish. Just to be honest with you, the fact that I'm using M1 boss is in a total different perspective when I want to use it. But in these high probability setups, you don't want to see your M1 boss. What you can also see very often is this kind of scenario. A price will, you expect price to return to it, right? But in fact, what it will do is it will from here just take you out like crazy. This is like one of the most, traps that we can see, specifically at a supply zone where everybody's looking for to take a short, is exactly the point where the market would just give you the illusion that you got your confirmation that you're waiting for. It's dropping, right? It's breaking structure. It's returning to your supply zone where you get your entry, and it's starting to move down from there to give you like the extra excitement. But look, it will never surpass this level. In fact, it will start reversing, it will break some form of structure, and then it will just continue with its bullish trend. And that is the real and honest truth, that the M1 boss can be powerful, of course, but not like everybody's looking at it, because that's exactly the problem. Everybody is looking at the M1 boss with the same perspective. And if you will remain at the same perspective at your entries, like the average SMC trader, like the average retail trader, then you will get the average results of these traders. And what we want to do is we want to get the best results possible. So let me show you one of our approaches. I got everything in a PDF for you guys. Everything is here down below this video. You can see all examples that we have. Probably we have much more, you know. I just don't want to show you like thousands of scenarios because it is all the same. Everything is almost the same. So let's say we want to go short from here. Very important. What I wanted to mention is that we pick a higher time frame supply, right? M15, which is in the 4 hours and so on. And then within the M15, we go and we refine everything down to the M1. And all we look is just on the M1 or the M5. So I like to use both time frames, M5 and M1 here. And once price is coming to it, what I like to do most is just this thing. Price is tapping into it and I'm already in the market. I'm already in it because I do expect price to reverse from there because this is my POI. I just look very often just to understand where are the POIs where we want to expect price to move down or to move up from. And if this price will hit my POI, then I'm in that trade, you know. So I do not need now to wait for extra confirmations as I do anyway expect price to return from there. And what I like to do is very often to use a 1 to maximum 2 pip stop loss exactly at this area and just place it like that so that the high is protected. So if this area is right now that big, then I will still let my sell limit order like this place just to protect the high so I can definitely get into this trade with my risk reward ratio that I want to see. So this is like one of the entries that we use, and as you can see it's not really an entry model because it's just like the fact that we just enter and that's all what we need in reality. So for me personally, this is like my favorite entry style to go with the risk type of entry. Ideally, what I want to see is that price is just generating a little bit more of liquidity right before price is tapping into it, is something which is making the full setup a little bit cooler, especially if you got like equal highs. That's what I like the most. If you got even equal highs and you see this, then it's like almost 100% that this setup will work if your POI is right. What you can also look a little bit to the left, because very often to the left you will see interesting things. And what I mean with interesting things is maybe you got here a source of liquidity, right? So this could help you a lot because if this is your supply zone and you expect price to drop down from there, you could just, you know, map out these equal highs in this case. That would be even equal highs. Sometimes you do not have equal highs, you just have this. It's still okay because you just grab some form of liquidity here from the left, and that would just give you extra confirmation for your setups as well. Okay, so keep that in mind. That's how I view it. So this liquidity, but for me, like I said, the most important fact is to understand, is this a valid supply zone? Isn't this a trap supply or anything like that? Do we have another supply which is more than likely the one that price wants to target? If everything is right, everything is cool, then yeah, why should I wait for the M1 boss? Because price will really move like this and I will have absolutely no chance to get involved in it. But let me just explain you right now, like what could happen as well is if the movement right now is not too crazy, right? If we do not come to the demand area where price is about to go where, because this is what it wants to do, or it wants to take here some significant level of lows before it can continue up higher or something like that. If this isn't the case, then very often price will give you a pullback, and that's what people forget about because people are so hyped that they need to get in their trades and they see they missed that, right? So they see here afterwards the M1 boss, that's what they see. And the thing is right now, then they try to just get involved somewhere here in one of the latest created supply zones. And now let's say this one will tag you in. It will tag you in, you're happy, you're making right now profits. The problem is just right now that this one isn't mitigated yet and price could just easily come to it. So that is for me, like, again, my entry model will allow me to put my sell limit here. Why? Because I got right now equal highs here at this point. Price dropped already crazy to the downside, and I can expect price to come to move up higher to take me in from there and then to finally come to the real target. The best thing is if we have here some form of demand, which should not be a demand which is super good one, which will bring you all the way to the top, because you always need to understand on the higher time frame where price needs to go. And if it wants to come here, then this is exactly on how here people get again trapped because they do not understand these things. So what I wanted to say is right now here with the entry styles is, do not rely on the fact that price give you the boss, right? Because it gave you your boss and people are so hyped, oh yeah, I need to get into it because it gave me my boss. So very often, you know, it will be cool to be like this. Now, this is right now the case that we do not use the M1 boss as confirmation. Sure, we do. But I'm not looking specifically for it every single time, you know? For instance, let's say you have this, we want to re-enter. And you see right now, okay, break of structure, price reversing. Of course I get into it, of course, because I know where price needs to go and so on. And these are the factors that are really interesting for me. For me, it's not interesting right now, oh yeah, let's wait for the boss so that I can really confirm this. Because like we said, this BOS could be right now just a trap because price wants to move up higher. Now here, important for this whole scenario is that you do not have here a valid supply zone, so which means no imbalance or something like that. Okay, so this is right now what I explained to you, my favorite entry models, and you can see that we, of course, we use the M1 boss as well. Even if it would be right now here in this case, price will give me the M1 boss. If I like the entry POI, right? If I like what I see, then of course I will enter, but I will not wait specifically now for the M1 boss. Okay. Okay, let's continue with the next entry model. So we know right now the M1 boss is something very typical. It's this one. So you wait for price to break structure to the upside and then to the downside. It's moving down. It's taking out the low before it did took a high. Then it comes to this new created supply zone. Ideally, you have there some additional liquidity. So you see here some bearish candle or something like that. Or you can go then even to the 5 seconds and to see something there, but 5 seconds I will explain that in an extra video as well on how we take the entries on the seconds. Now I just want to give you in general the models, because everything that you see here can be used of course on the 5 seconds as well. It's the same principle, everything. On the 5 seconds the thing is just that the candles do look so weird that it would just a little bit confuse you, especially if you're not familiar to use the 5 seconds. Okay, so that would be right now one of the models. So we got risk type of entry, we got M1 boss entry. What else do we have? Yeah, like I explained already, the order flow entry, right? So that is exactly, for instance, you got your supply, okay, and price is moving, and then it's suddenly going crazy, moving down, breaking structure, then coming all the way to the top. And that's what people do not like. If it comes very crazy, then it's breaking structure, coming one more time again to the top, moving down one more time to the top, and then it finally starts to go crazy, right? So here, this is bearish order flow entry, because you can see price is indeed taking out here the lows after lows. It's going bearish. It just looks like price at some point could just reverse and go against it, because it's building up liquidity for sure, and at some point these highs will get taken out, but also only if price will hit some relevant POI, which will be responsible in general to switch price, and it will not just shift to take out this and then to drop down. No, it will come when the time is there that this will occur. So this is order flow entry. Also something very typical and something that I like to use. Sometimes it will happen like this, which means price will not give you the BOS from the start. In fact, it will not give you the BOS, and still you could take the entry, because what we look for is just that price is tapping into a POI that we look for. So for instance, you could have been just taking your entry already from here, because that will be the risk type of entry. Now let's say you want to wait for a little bit extra confirmation. You see price giving you the reaction. Maybe then you say, okay, it's starting establishing some form of order flow, and you're just starting to re-enter and re-enter and re-enter and re-enter, which is totally fine, right? Because prices continue to go lower and lower, and for us relevant is that price is taking out some form of flow, okay? Because then we know that people got liquidated at these points, and this is the whole idea of this order flow entry, and also the idea of taking right now here this kind of break of structure style, because that makes it for us relevant. Now, ideally, of course, is breaking this. But like I said, we do not use entry models to confirm our ID. We use entry models so we can get into the trades in the best possible prices. That's what we want to do. So this is why important is, if you want to use entry models the right way, is that your first step is your POI. And if your POI is on point, then you use entry models, okay, to get your best risk reward in your trades. That's all. That's the full secret, right? In order flow is one of the possibilities for it. For instance, okay, break of structure could be also one of the possibilities. Now let's have a look here very quickly, because that's on the PDF. So like I said, this is our risk type of entry. Maximum 1 to 2 pip stop loss is what I do personally take. If you're not happy with these stop losses and it's too small for you, you can go, of course, for a bigger one. It's not a big of a deal. I would just always, every single situation, it's better for me to not get into the trade, but I want to get my risk reward. Sometimes, the supply zones, demand zones are super big. This is where you can then refine it with the seconds to get it a little bit tighter in these situations. Still make sure that your high is more than likely protected if possible. And if nothing will help you, then just use a higher stop loss. That's the thing. Okay. Then liquidity hunt before mitigation plus order flow. Yeah, that's exactly what we just talked about. So like you have here a little bit some form of equal highs that price likes to run on. Then it's giving you a break of structure, and then it will just follow bearish order flow with the price moving down. It's the same like the M1 classic boss, okay? Just that you see here additional liquidity on it provided. Then this is exactly that thing that we just discussed right now with the order flow. So one with the break of structure here. So you see price breaking structure, moving down, creating order flow, moving down, breaking structure, and again, order flow, order flow, order flow. Here, same kind of thing, but without giving you the break of structure before you can even enter, right? Because it's in the real POI, so it will continue to move down. And then this is really the classic of the classics, entry with boss. But for us, what important is always to have a form of liquidity, okay? At least here internally. If it doesn't provide you here too much liquidity, okay, in this case you got only one break of structure, right, which is a form of liquidity, but it's it's not very big, especially not on the M1 and so on. So the best is if you have here on the left something like we explained in the beginning of this video. But if that's not the case, look to see if you have here some form of liquidity. So when you see here a little bit of trend line, that's ideally for us to even confirm it. Then you can see prices again breaking structure, creating some new order flow. Could be also a new re-entry possibility. Well, that's basically it for entry models. So like I said, it's nothing right now too crazy. I think everybody knows these kind of entry models. What I forgot to mention is probably Wyckoff. It's specifically because I do not really use Wyckoff anymore like that. So of course when I see it and so on, but people are always so hyped on Wyckoff. So Wyckoff is basically, you can view it like this, right? So you got one in the middle, which is higher, but here internally it's liquidating a lot of things. So even if you see Wyckoff, could be an opportunity for you that you say, okay, I can get into an entry. But like I said, do not forget a distribution phase could just end up with one small push down, and then it could just go totally against you. So for me, like I said, it's not really an entry model because you can spot all these things that we already determined within the Wyckoff anyway. So there is no reason for me right now to really show you, okay, Wyckoff is an entry model for us, because what we really use is just some form of breakup structure, some form of liquidity, and at the end, the most important thing is that we choose the right POY. Okay, so make sure to download the PDF, make sure to take your own notes, that's the best, and try to find some nice examples on the charts, friends.